Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. This is being recorded on the early evening of Friday, October 3rd, 2025. If you're new here, every Friday afternoon or evening, I recap the week in precious metals and do a look ahead. If you're not subscribed to the channel, be sure to click that subscribe button so you won't miss any of our Friday weekly recap videos and the other videos that we publish on this channel. Thank you. And boy, it just continues for precious metals. Another good week. Let's look and see here. The weekly performance is right here. This is gold, silver, GDX, GDXJ, SIL, and SILJ. SIL, the only outlier, up only 1.3% on the week, while the silver juniors are up 2.6%. They both underperformed silver, which was up 4% on the week, as it's getting really close to 50, so that's interesting. Gold was up 3% on the week. GDX up 3%. GDX was up 3.2%. GDXJ up about 3.7%. So another good week in precious metals. Let's look at our quick market overview here. Gold here, silver here, gold divided by the S&P 500. Here are the stocks that I just mentioned. Right here, here's the yield curve, still going sideways, no sign of a recession. And the stock market continuing to trend higher with the mining stocks. Let's get to some of the details in these individual markets. Starting off here, we have the gold daily candle chart here, the silver daily candle chart, and this is the gold-silver ratio, gold divided by silver. This is in a downtrend, as I've been pointing out the last couple weeks. Lost the 200-day moving average here and is turning lower, although in the last week, didn't decline that much. That's at 81. We have to keep an eye on this because it's one thing we would like to see, would help us to think that we've seen an intermediate term peak or a medium term peak in the sectors. You get this kind of plunge down here where everybody goes into silver at the last moment. Have not seen that yet. Now, the price action here, as we can see, this breakout here, again, the upside targets from that breakout. 3750 already hit. 3900 getting very close, $10 away today, and also 39.50. So based on these targets, there's a little bit more upside for gold. And you think the bulls would probably want to get this to 4,000, so that's also possible that it could hit 4,000 before we get a sustained correction in the sector. Again, these are the spot charts. Here's silver here. A little bit of selling this week, but still more buying, and you can see that again today. Closed up just a couple pennies below 48. I think this will hit $50 next week, and it's likely we see that before an intermediate term peak in the sector. Now, moving on, this is something I want to point out with gold. Everything is pointing to 1972, 1973 as the strongest comparison by far. Now, one sign of that, the last time gold touched its 200-day moving average, that was a year and 10 months ago. So we're almost 2 years into that, and if we look how far above the 200-day moving average gold is, this is going to hold up for a while. So this is going to go well into 2+ years. Now, the comparable point in history is the early 70s, because this period right here, this was about 3 years and I think 2 months maybe of when gold held above the 200-day moving average the entire time. And by the way, this is a weekly chart, so we're using the equivalent of the 200-day moving average, but that's so we can see everything here on the scale. So again, that is a comparable point. There was one point here, I believe it was here, where gold may have been above the 200-day for 2 years. But other than that, I mean, there's no other comparison. This secular bull market was much different because gold never went more than a year or so above the 200-day moving average most of the time, although I have to bite my tongue a little bit because actually I think at the end it was above it for close to 2 years. But aside from those points, we can see here and now breaking out of the cup and handle pattern, major breakout, well above the 200-day moving average. It's most similar to this period right here. And also a similarity is the quarterly RSI. Now, the quarter just ended a couple days ago. This is where the quarterly RSI is. And we can see this is the best comparison for where we are here and now. Yes, you do have high readings here and also high readings here and here. But those readings, particular this one here and this one here, those were at the end of a secular bull market. we're at the beginning of a secular bull market as we were here. And again, as we are here, because the secular bull market began right here with this breakout. And so we can see that's where the RSI is. Again, compares best to actually right here, right before I zoomed in and looked at this myself. The RSI hit this level right before the last quarter when it made this peak. So this quarter here, that was a 35% gain in gold. What's a 35% gain from almost 4,000? That type of gain would take gold well above 5,000. And of course, right here, this is when gold corrected 28%. So it only corrected 12% here. Huge move upward, basically doubled. Then you have a 28% decline. So where we are here and now, you can't see it on the quarterly chart. It did correct 11%. So is it vulnerable to a 20% correction? Maybe, but I think it would have to go well above 4,000 before we get to that point. And as I said, to get to this point right here, that implies another 35% gain from where we are here and now. So gold can definitely correct, but we're not going to see anything like this at this point. Okay, so moving on, let's talk about the quarterly chart in silver. Very, very important development. Why? Right here. This is a new quarterly all-time high in silver. The previous quarterly all-time high was here at 37.60, and you had this, the open of this candle here was at 39.95. So 39.95, 37.60. The silver just completely obliterated that, closing at, I believe, let's see, we can do the math. So that's 46.60 something. This close. Just obliterating those two levels. And remember, when gold made its quarterly all-time high, end of 2023, December, 2.5 months later, that's when daily and weekly terms have finally moved above 2,100. So perhaps that means in the coming months, not the next month or two, but maybe, who knows, 3, 4, 5 months after a correction, then you could see silver take out $50. And so here's some intermarket analysis from silver. I've been talking about silver against the 60-40 for a while. And this last week, this is another close. So this is 2 weekly closes consecutively of a new 11-year high in silver against the 60-40 portfolio. Now, what you should also know is this has occurred multiple times in daily terms. And also a couple days ago, the end of the month in September, that was also a monthly breakout of this huge base. So this is a clear breakout, and it's really being powered by this breakout here. So this silver against the stock market, this is 60% of this chart. But we can see here in the last month, beautiful breakout here by silver from a 4-year-long base against the stock market. Now, this breakout has a measured upside target that projects right about here. So it projects right about here, which is about 8.2, 8.3. And so we can see this is just below 9 right here, 0.009. So the target is in the middle somewhere. This is a log chart. So there's still, we can see there's still room for this to move. There's still room for silver in the short term to outperform the stock market. That's pushing this higher, and that's at least going to get silver to 50. Maybe it gets silver to, I don't know, 53, 54, and maybe it peaks there. So keep that in mind. And so here's the gold-silver ratio here. Right here, you can see the gold-silver ratio. This is the price of silver. This is the rate of change. So the rate of change for 20 days of the gold-silver ratio, rate of change for 50 days of the gold-silver ratio. And so we can see typically, you look at these peaks in 04, 06, 2011, and we can see the corresponding plunge in the gold-silver ratio. Here, you also see it here, to a lesser degree after COVID. And so, yes, this has come down, but it could have more room to come down, as I mentioned in past video, maybe to 73, 75. So if you get that last burst in silver, this could come down here. And then look at the room that these have to move. These are nowhere near an extreme. So the point I want to make is that, yeah, silver could keep going. It could peak at 50, 52, 53, whatever. You know, these will come down a little bit. But these are not where they were here, here, and here, and even here before, you know, the ultimate peak. So the fact that silver is not that stretched based on these indicators, that if it were to get to those left 50, 52, 53, and then it pulls back for 4 or 5 months, that's giving silver more fuel to be able to make that spectacular breakout move, the second greatest breakout of all time. And so silver is not as stretched as you might expect it to be, given that it's had this move. So this has been a grinding move. Went up here. This has been a grinding, steady move. It has a really good base here in the upper 30s and 40, 41 versus we can see here what happened in 2011. This move was straight up with one little correction. You can even see here the 03 to 04. Look at that. It was similar. Straight up, one little correction. Straight up here, 05 to 06. So we haven't really seen that straight up move with no correction. Okay? So if you think about that and then think about silver correcting for, let's say, 3, 4, 5 months after it peaks around 50, that's going to put silver in position to really take off and really accelerate after it breaks 50. It's not as stretched as it was here and here, and definitely here. And that's going to be the case even if this were to peak at like 53 or 54. So I like how it's set up for the future. And so here is one of my favorite analog charts, and this shows silver's performance after gold breaks out to new all-time highs. So the historical breakouts were 72, 78, 2009, and then you have the current one. So those three are on the current scale, but I'm only showing 1972 here. Now, the other three are in the average right here. So you can see this is the average of all three. And then here is the average of the week or two, removing the 78 to 80. And so you can see where these lines go. But I wanted to highlight 1972, which is here in this color. And so the black is where we are here and now. Look at how close these two are together. It's not perfect, but they're closer than the other ones. And I've said this before, on this scale, this is what happened, the 1972 to 1974 silver move. But you can see this is a beautiful cup and handle right before 50. And what happens after it breaks out? Boom, moonshot. That's going to happen when silver breaks 50. Now, is it going to happen this fast? This move in 4 or 5 months, 50 to 100? Maybe not. It'll probably take more time, but you get the point. We all know what's setting up and what's coming with respect to silver. And by the way, with respect to silver, if you haven't subscribed to the Daily Gold Premium, would love to have you come aboard and join. In last weekend's update, I published a top 10 table of my 10 favorite silver stocks. And that's based on what I think are the top 10 best junior silver companies based on the company, quality of management, the quality of their assets, and those types of things. So if you're not a subscriber, would love to have you come aboard. Those of you who have subscribed, thank you so much. I appreciate you and your business. I'm eternally grateful. And we are looking for a combination of quality juniors with quality assets that have 5x to 10x upside potential over the next 2 to 3 years. And if you own minors or juniors and you're not a subscriber, I think it would behoove you to consider a subscription. Head on over to thedailygold.com/premium. You can read about the work we do and what we're looking for there. Okay, moving on. Let's wrap this video up and talk about the stocks. Okay, the new highs in GDX. Okay, I've been talking about this for weeks, but now we're up to 45%. The 20-day moving average of new 52-week highs in GDX is at 45%, now dwarfing all these other points. Now, this chart is like over a 20-year chart, and this is where we are here and now. This thing almost looks like a rhino horn. So don't be surprised if this thing goes like this for 6 or 9 months. That is certainly possible. I wouldn't be buying at this level. This is really stretched, and we're really ripe for a correction, especially as silver is about to touch $50. Now, the bigger picture and why this move has continued in recent weeks, although it's been so overbought with respect to the miners, is institutions, professional investors, the big money, they're all underinvested in precious metals, gold, silver, miners. And so here we have GDX against the 60-40 portfolio, GDXJ against the 60-40 portfolio. So these charts are showing you gold stocks against a conventional portfolio. And again, this happened in the last month. Huge breakout here from a 12-year long base. So this tells us money is moving out of conventional investments, the conventional portfolio, into gold stocks. GDXJ, the even riskier companies. GDXJ against the 64. Look at that. This baby is breaking out to a new 12-year high. Now, both of these, I think, could pause and pull back for a couple months. But ultimately, from a 30,000-foot view, what we're seeing here, this is just the start of new money going out of conventional investments and ultimately into miners. And when you break out for a really long base like this thing has way more upside. It can move like that, okay, over the next couple of years. So this trend is just getting started. But as I've been saying, we're likely at an intermediate term peak. Okay, finally, let's look at the silver stocks. SIL here, SILJ. Now, I've been talking about the potential measured upside target. I looked at this again using closing prices on a different chart. And so looking at this here, measuring from here to down here, this actually projects to 74. And we've been really close. Like I think we almost hit 73 with respect to the weekly intraday high for SIL. So this move here, I think we're going to see this peak. If we didn't already see it peak, this could happen in the next week or so because it's already hit the measured upside target. And there is some technical resistance here, 74, 75. Now, SILJ, that actually has more to go. I mentioned it before, but this move from here ultimately projects to a measured upside target. I think of around 27, so this got up to 24. It doesn't necessarily have to hit 27 before it peaks. But in any case, I don't see that much more short-term upside for the silver stocks. They've had a spectacular run. Silver's closing in on 50. Not the time to be buying, okay? It's a time to be holding, but also trimming. And that's it for the video. Thank you so much for tuning in. I really appreciate your support of my work and the channel. And let me know what you think. Leave a comment. We'd love to hear from you. And hope you guys have a great weekend. I'll talk to you guys again in the next video. Thank you.